Hello folks and happy Friday. This is Dr. Jeff Camarda with a timely bit called Is the Stock Market in Freefall? Now my friends, the market rout of the past week or so has been very disturbing. And while it's difficult as human beings to not be deeply concerned and worried, it's important at times like these to point out that market volatility, great on the upside but quite disturbing on the downside, is really par for the course and the price of long-term growth. Gyrations like this are normal for markets, and while the point value on the Dow, for instance, seems like a really big number, percentage-wise it's not nearly as much as the point value might indicate to you. What I think is happening is a long overdue price correction, one we've been predicting here at Camarda for some time. And remember, the term correction is used because it means that overpriced stocks are corrected to more reasonable price levels. Now, much of the impact has been on high flyer stocks like Netflix and Amazon, which many, including myself, would argue are still overpriced even after the recent plunge. For example, as I wrote this a little bit ago this Friday morning, the PE or price to earnings ratio in Amazon is about 136, down from 170 last time I looked. Seems cheaper, right? But what this really means is that if Amazon pays out every nickel of annual profits, currently about $12.60 a share, investors who own a share of stock at about $1,720, right, $12.60 in earnings, $1,700 investment, they'd get their principal back in about 130 years. 130 times $12.60 is about $1,720. That's what a sky-high PE of 130 really means. And I think there's still far too much hot air in the Amazon balloon. Now, as you know, Camarda has been concerned with overvaluations in U.S. stocks for some time, and these chickens may be starting now finally to come home and roost. For this reason, we've been on a value footing for over a year. Some would say a defensive footing. And while we may have missed some of the splash of the overvalued high flyers, which are now coming down some quite dramatically, we think that we and you are in a much better position when the air comes out of the bubble and investors start caring about owning quality companies, but only at non-crazy prices, which at the end of the day is what investors really care about. The year may be starting to hiss out just a little bit now, could get a lot worse. Initial indications are that Camarda-style value investing is holding up much better than the growth and indexing programs that have become so popular elsewhere, like at Vanguard, the robo-advisors like Betterment, and many other advisors. We think this is really just the beginning of a major price correction, and that Camarda investors will be quite happy with the value strategies that we've built. So try to keep a chin up as we saw through this volatility. I firmly believe the money in your portfolios, your families and my families, is very well positioned for the conditions that we foresee ahead. But if you have investments elsewhere or know others who do, consider having us stress test those assets before it may be too late to stop the bleeding. Conditions have gotten extremely ugly for both bond investors and for index investors who often don't know what they really have in the index. And this represents millions of people and trillions of dollars. And many of you and your friends are probably in this pot. For instance, nearly all the gains in the S&P 500 index through mid-year were from just 4 stocks: Amazon, Microsoft, Netflix, and Apple. What about the other 496 stocks? Actually, it's closer to 498 stocks. It's not a 500 anymore. But what about the other ones? Didn't do so good, but that's most of the exposure, right? Or most of the names. If these tech giants, these 4 stocks that dominated the S&P 500 results for half a year, if they really plunge, and it was pretty ugly last week, the impact on index investors can be devastating, and most index investors don't really understand this. If you're not sure, let us stress test your statements. No charge or obligation. Happy to help. Just call 800 800-262-1083. That's 800-262-1083. And if you're driving and not watching, it might be easy to remember 888 Camarda. That's 888 CAMARDA. And ask for encryption instructions so you can email us your statements, and I promise to turn around the stress test as quick as we can, typically within a day or so. Now, over the next few weeks, you'll be getting what I've got to call mini lectures via email and video, just like this one, on where I think the markets and world economies are headed. I think you'll find it very interesting and hopefully somewhat reassuring. But until then, stay calm, but make sure that you know what you're invested in. And if you have investments outside, let us stress test it for you, just so you can sleep a little bit better. That's all for now. Thanks so much for watching. This is Dr. Jeff Camarda. Until next time, please have a peaceful and profitable time. Bye-bye.